The most fundamental reason for a stock's strong rally is the moving average cradle. Without robust underlying support, the stock's upward momentum would be weak, making subsequent continuous gains unlikely. Please refer to the chart of Amazon stock below. The intersection point indicated by line A is the node formed when the 5-day moving average crosses above the 10-day moving average. The intersection point indicated by line B is the node formed when the 5-day moving average crosses above the 20-day moving average. The intersection point indicated by line C is the node formed when the 10-day moving average crosses above the 20-day moving average. These three nodes form a closed triangle, which is referred to as the moving average cradle. When the 20-day moving average is at the top, the 10-day moving average is in the middle, and the 5-day moving average is at the bottom. This arrangement is called a bearish alignment. In the Amazon stock chart, the moving averages before line segment D exhibit a bearish alignment. As long as the moving averages are in a bearish alignment, it is impossible for a price support triangle to form. Without such a triangle, the stock's downward trend is not yet over. Only after a prolonged decline, when the stock can fall no further, selling pressure from the bears eases, and the bulls begin to tentatively enter the market, gradually pushing the stock price higher. As the price recovers, the 5-day moving average crosses above the 10-day moving average for the first time since the decline began. This indicates that buyers over the past 5 days are willing to pay more than the average price of the past 10 days to chase the rally, reflecting that short-term demand for the stock exceeds supply. Driven by the profit demonstration effect, more investors start buying, and the prospect of holding for further gains encourages existing shareholders to retain their positions. The situation increasingly favors the bulls. Soon, the 5-day moving average crosses above the 20-day moving average, meaning that those who bought within the last 20 days are now in profit. This development continues to motivate people to buy the stock and encourages shareholders to hold on. Demand for the stock surges while supply dwindles. Eventually, the 10-day moving average crosses above the 20-day moving average, completing the formation of the price support triangle. This expands the scope of profitability to include those holding the stock over 5 days, 10 days, and 20 days. If this cycle continues to strengthen, the three moving averages will form a bullish alignment upward. In the Amazon stock chart, the moving averages after line segment E exhibit a bullish alignment, marking the start of a bull market phase. The question of whether the triangular support is a universal pattern in bottom formations has been examined, and it has been found that the vast majority of stocks exhibit this pattern. At the end of a prolonged decline, this triangular support almost becomes synonymous with a market bottom. The chart below illustrates various forms of the price support triangle in the stock market. We will discuss the classification of these patterns in the next section.